Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look at the Great British Pound today. In second video, as you can see, this is chart of the gold that we discussed yesterday. As you can see, market mostly stands in the same range and forming the same patterns that we have discussed, and actually currently not much to add on the gold market. That's why today we shift to Great British Pound, because market stands actually at the culmination point that we discussed. And take a look. This is daily chart. The market has hit our OP target and hit the lower border of the confidence resistance. So if you remember, on the weekly chart we have confidence. This is just lower level, it's 28.37, but we also have level around 129 area, which is a 30% major resistance on the weekly chart on the Great British Pound. So this is rock hard resistance, and as I suspect, or at least it's really odds suggest that something here really could happen, because this rally is rally on the rumors. Here and there we see news. Here is some statement from the representatives and politicians, and then the Ireland politicians, that solution is done with the Ireland, that will stand intact, and no split of the economical space of the Ireland will be. So the economical border between the European Union and Great Britain will not stand in Ireland. It will not split it. But in this case, I will ask you, where will be the economical border between the Great Britain and the European Union? The only solution for that problem is the Ireland Sea. Do you believe that the European Union will let Great Britain to take the part of the economical space that belongs to the European Union, and to not split the Great Britain economical space in two parts? I'm really has big doubts on this. That's why, despite that maybe rumors sounds positive and it's a lot of euphoria in the mass media that well, the Brexit is turning from the point, and something is from the dead point, and something is going really well. So things that Theresa May wasn't able to resolve, the Boris Johnson was able to. Now is moving forward, and it's everything great. But well, I really have big doubts on this, because it's well known within the recent 2-3 years that the border could be either in Ireland or in the Ireland Sea. If it will not be in Ireland, this will be in an Ireland Sea. But both solutions are not acceptable for the Great Britain, and I really have big doubts that European Union is stand on concessions, that it will step out from its own economical interest and bring the advantage in the hands of the Great Britain in this question. So that's the thing that's really worrying me. And this rally looks really strong, but well, market stands in strong resistance, and everything can happen here. So what we have currently on the charts. On the 4-hour time frame chart, you could see that our suggestion on upward continuation is done. The 1618 extension of this XA recent swing finally is reached. Grabber that has been formed has worked perfect. Market has exceeded this top and turning up. That's just a few moments that we discussed in the last 2 days ago in our last update. If we will be correct and indeed something will happen around this Brexit turmoil, since it's just 2 weeks till the deadline, if indeed it will be just rumors, and in reality the solution will be far from final resolving, well, that really could be the tragedy for the market. And since market stands in 1618 extension of this retracement, this extension is very common for, as you understand, head and shoulders patient. So That's just one of the solutions that could be. In the shorter term perspective, we have on hourly chart another pattern, which is the 3-drive sell. I just, without even taking a look at the MACD indicator, I definitely could show you that we probably have here divergence. This is almost 100% guarantee that we have it. Indeed, that is the divergence. Don't forget that we stand in the weekly confidence resistance. The minimum target of the 3-drive, of course, everything could fail, and if external political news will be confirmed, so real steps in signing of the agreement, that's definitely no doubts will be positive. But I just know the value of this problem, the size of these problems, and I'm really has really big doubts on this will be resolved positively. This puzzle. So this minimal target of the 3-drive, it means that this could be collapsed right below this, but theoretically this pattern could trigger the significant reversal on the Great British Pound. So that's the thing that's the issue to think about. Definitely, it's not time to take the new long position. Of course, if you do not want to bet on the final agreement signing and the positive breakout on the chart, this could happen, but technical picture tells the opposite. So odds stands in favor of the retracement, at least a retracement. So following the technical setup, this is not time to take the new long position because we're at weekly agreement, weekly confidence resistance, market overbought, as on the daily chart, as on the weekly chart. On the intraday chart, we have bearish reversal pattern, we have divergence. So this is time for thinking about taking the short position. The attractiveness of the taking the short position here stands with a very close invalidation point. So you could place stop above the confidence resistance on the weekly chart, on the upper border, diminish your normal trading value because the scale of the setup is a bit greater than just daily chart. It's a bit more extended. But the result, if we will be correct, the result also will be more significant than usually we have on the daily and intraday charts. This is something like the trading elections 2 years ago in Great Britain as well. So the short position also could be taken differently. The one thing to take position based on the 3-drive pattern. This is more risky maybe in terms of the foreseeing of the possible downward action, but taking position earlier gives you better risk-reward ratio. You could try and take position later when the market starts dropping on some retracement. Ultimately, you could follow this scenario, wait for a hand and shoulders pattern or something of that sort here, maybe some collapse and then deep retracement after that, try and take the position. So this is absolutely different and personal depending on your attitude to money management and how you usually manage your positions. But one thing that I would like to say is that currently situation is not good for taking the long position. If you're considering taking the short position and you think that it's also some problems exist around this Brexit, that's the setup that you could consider and make the decision on it. I'm not calling to anything. Just make a decision, think, apply your own tools for analysis, whether this setup corresponds to your view or not. But that's the issues that I see, and maybe this will be just useful to somebody.